million for the rest of his life. Record payouts for some, short shrift for others. Joining me now, John Carney, editor at dealbreaker.com, our guest host, Alan Murray of the Wall Street Journal. I don't know how, Alan, you always surprise me. I never know where you're going to come down on some of these things. So we'll start with John, and I guess I come down with John. Look, these guys, as a percentage of revenue, even at Goldman, it's less than in previous years.
Right. In some ways, the guys at Goldman could complain that they're making less bonus than they ever had before as a percentage of revenue, and they're making less than most of their peer group as a percentage of the total revenue that the bank is making. They could wake up on the day they get their bonus award and say, "We've been robbed by the shareholders." They're getting a lot more money.
My only caveat here would be if the shareholders aren't getting their due, they're the only ones that, in my view, Alan Murray doesn't have a right to complain about bonuses at Goldman. Only shareholders have a right to complain. Now, if they had a $40 stock 3 or 4 years ago and it's $200 right now, because of the efforts of the people that are getting paid the bonuses, and why should they complain?
I'm crying.
Why are you crying?
Because I feel so bad for these guys.
You don't need
their
to feel
bonuses
bad.
are only going to be $30 million.
I don't think you feel bad. I think you feel jealous. And if you want to make that kind of money, go get an MBA, start in the mailroom at Goldman, and work yourself up to Lloyd Blankfein's job.
I agree. These guys are making a lot of money for the firm.
Go to Goldman.
Wait. Hey, can I say something?
Go ahead.
They're making a lot of money for the firm. They're making a lot of money for the shareholders. That's a good thing. And it is a marketplace. A lot of these guys could go out and join the hedge fund world and make even more money. But at some point, you have to take a couple of steps back and say, okay, is the social value that these guys are providing that much greater than the people who are researching new pharmaceuticals that are going to save people's lives, the people who are making things? I understand it's a market.
Teachers, social workers.
I am not going to feel sorry for these people because their percentage of the take has gone down a little bit.
In a lot of ways, though, these guys are the guys who are making it possible for people to go out and do the research to cure cancer. They're the guys who are putting together the companies.
It's a socially valuable service.
Right.
But is it a socially valuable service worth 30 or 40 or 50 times what the people doing breakthrough research on new pharmaceuticals?
The marketplace says yes. If they don't pay these guys the kind of bonuses.
Most of the times the marketplace is right. Sometimes the marketplace gets a little bit
Are memorizing lines that someone else writes or catching baseballs worth 40 or 50 or 100 times?
More importantly, forget
about
how you match it up against a baseball star or a movie star or anything else. More importantly, if they're getting a smaller percentage than some of their peers at other firms, look at Goldman. You want to hold on to these people, they'll go somewhere else.
Well, that's true. But right now, at Goldman, they're making on average, it's double what any other firm is making. So the hedge fund threat is real.
If they don't pay these guys this kind of money, they will leave. And a lot of years, they won't get paid this. If the market takes a downturn, these guys aren't in it for the next 20 years. They're in it for this year. They made the money this year. They want to get paid this year, or else they're out.
I live in Greenwich. I'm surrounded by the guys who left Goldman and started hedge funds and have these. Okay, but don't say that we need to feel sorry for these people because you're
living in Greenwich in that little rental and you're looking around
my trailer. I got my house trailer there.
We wonder why you're not crying for these people. But you can apply at Goldman, Alan. You know that. If you really are, you can go, but you're going to have to work your way up.
I'm not going to apply to Goldman knowing that their percentages.
Forget it. John, are these guys actually mad? Are we making this up, or are some of these guys actually saying, hang on, where's my money?
No, I would say that, there's a couple people are going to be very, very happy, but there are some people, not at the very top of the totem pole at Goldman who are going to, be angry that they're making $25 million or $50 million. But a little lower down, there are some people who are going to say, hey, wait a minute, why didn't I make, a bit more?
I only made $5 million.
Right, well, or just at the analyst level or, the very basic level, at the lowest ranks of Goldman, there are some people who are going to look at their bonuses and say, I made, we paid out 43% where Lehman paid out 49%.
I guarantee it. There are some bankers that all they do is go play golf with companies, and they got 40 grunts.
I still
put it together, and they're the one.
Those are the guys who are complaining. The
guys that actually know how to do it.
Okay, but whether it's a great thing that the best and brightest in our society are going into the trading business to do financial deals all day long, I think it's a great thing.
All right. deep down, I know, Alan, deep down, you take it all the way, you are like sort of a capitalist, way down. I know you are. I know you are, and that's
but
why
capitalism isn't just about shuffling capital. It's about making things. It's about
inventing
things.
This
is the money for making.
I mean, these guys actually do make something. What they make is they make
But
lots
not
of
enough.
money, but they make companies. What they do is they look out in the world and they say, here's a company that's not working. How can we get it to work? And they make it operate, and find the right people to run it and find the right way to finance it. And so they're not just shuffling money. They're actually a lot of times shuffling management and the way companies are supposed to work.
All right, John. Thank you. Appreciate it. We got to go. Yours is off. You must have a BlackBerry too.
I don't have one.
All right, that's what anyway, coming up, the e-commerce play.